what exactly is a syndication? Some of you may already know what a syndication is, but I just want to unpack it a little bit. So if you're thinking about a syndication, what is it? How does it work? I just want to give you the high 30,000 foot overview so you can get an idea of what we're trying to accomplish here. So a syndication is basically a group of investors, either sophisticated or qualified accredited investors, who pool their money together to purchase a larger asset than they could purchase on their own. Hi, everybody. My name is Brian from BHB Group LLC. And in today's golden nugget for BHB Group, Why Not Real Estate, I want to discuss what exactly is a syndication. Some of you may already know what a syndication is, but I just want to unpack it a little bit. So if you're thinking about a syndication, what is it? How does it work? I just want to give you the high 30,000 foot overview so you can get an idea of what we're trying to accomplish here. So a syndication is basically a group of investors, either sophisticated or qualified accredited investors, who pool their money together to purchase a larger asset than they could purchase on their own. So instead of one investor coming in with a set amount of money that they can invest, two or three or a group of investors would get together, pool together their money for the down payment, and pull down a larger deal. This typically is going to be a $3 to $5 million deal for a smaller deal, all the way up to a $10 to $15 million deal. And of course, we would have to raise 30%, give or take, depending on the deal, depending on the circumstances, depending on how we're purchasing it. Is it an on-market deal where we're competing with other investors? Is it an off-market deal where we might be able to create better terms with the seller? Every deal is different. But the overall view is a group of investors pool their money together to buy a larger property. And within that, it's called a syndication, and it is governed by Securities Exchange Commission, SEC, governing rules and laws. This type of a syndication structure is going to have general partners and limited partners. So the general partners are doing all the heavy lifting. They're building the network, looking for the teams on the ground, reviewing the properties, finding the market. I like to say kissing 100 frogs to find one prince. So they're doing all the legwork to find the market, build the relationships, the brokers, the attorneys, everyone that we need involved in the game, the property managers, to find the deal. And once the general partner finds the deal, then typically they'll bring on limited partners who will supply the money and have less risk in the deal. So a general partner puts together the syndication, and typically they're going to have their money in the game as well. And then the limited partners bring money into the game. So experience and money come together to pull down a large property. And in the limited partners, as I said, could be a sophisticated investor or an accredited investor. A sophisticated investor is someone who may not meet the full requirements of an accredited investor. So there's more risk in that type of deal because any investment, especially a syndication, you could lose all of your money. I mean, anyone who tells you that that's not a risk is not telling you the truth. So you really, for a sophisticated investor, have to have a much more defined operating private placement memorandum, which explains all the risks of a deal. And then you have your accredited investor. Typically, your accredited investor is someone who has a net worth that exceeds $1 million, not including their primary residence. They would have had to have either a $200,000 or $200,000 income individually, or a joint income of $300,000 to become accredited investor. And depending on the type of syndication you're going to do, You could have just accredited investors, or you could have a mix of accredited and sophisticated investors. We'll go into those different types of SEC syndications on another golden nugget, but right now I just want to stay at 30,000 feet. So just to wrap this up again, for a syndication, it is a group of people that pool together their money to purchase a larger asset. In that deal, you'll have general partners who are doing all the legwork to find the deal, build the relationships, underwrite it, make sure it works, come up with a business plan after the acquisition of the property with some type of value add. That's what we like to do, a value add. We might look for something that's being poorly managed, or there are areas of improvement for the operating of the property. We look for things that we can add value. And then you have the limited partners who will come in and they basically want to write a check and get a larger check back. So they are not responsible for the voting or a lot of the hard work, the asset management of the deal, but they are invested into the deal. And as a general partner, our commitment to them is to first and number one, secure their money, make sure it's not going to get lost. And then second is to make sure we have a good return on their investment. So we're combining to buy a larger asset. General partners find the deal, limited partners come in on the deal. And that's the general formation of a syndication. So in some of our other golden nuggets, we'll drill down deeper into some of these other things, how the returns work, things that might be in the business plan, and a lot of other details. So we hope you're going to enjoy this series. We just want to educate you on what it is that we're doing. So if you're thinking about investing with us any point along the process, you can come into these golden nuggets and kind of just nibble at the different things that you might want to find out more about. So I hope that was helpful, and look forward to seeing you on the next golden nugget.